Hello. So welcome back to this week's market analysis. Right. So in today's video, I'm going to be talking about chasing the markets. Right. I'm going to explain to you why chasing the markets is one of the worst things you can do as a trader. Right. Think about this. You see a chart, right? Whoa, it's so bullish, right? Huge candle, right? So you go long. Pop, you're long. And next thing you know, the market retraces against you and stop you out. Happens, right? It happens. So I'm going to share with you what you should do instead, right? To actually, prevent this kind of, problems in your trading. So I'll cover all this and more in this week's market analysis. I'll see you there. Okay, so just want to share with you a feedback or a comment from Mr. Shun Kui, right? He says, Rainer, your sugar trade was spot on. Have been watching some of your videos and I think they are really good. Do you have a signal service or something? So I just want to share this, which I think is important, right? Because if you have been following me, say for example, over the last few weeks, right, you know that quite a number of my trade calls have went into my intended direction. But this is not to mislead you and think that my trade calls are always, this accurate, because I also have my own losing streaks that come along with it. Because if you have been following me over the last few months, all right, or a long enough period of time, you'll know that I have losing streaks, and I'm not shy to talk about it because this is pretty much the reality of trading. So I'll say be careful, right? If you watch any videos online, right, even mine, right, and you see that I have a few winning trades, and you think that I'm onto something, right, the holy grail or something, because that is simply not true, right? In fact, the only reason why I'm still in this trading business is because of one thing, and it's not my trading strategy. It's this: risk management. This is the only thing that has kept me alive after all these years, right? It's not my trading strategy, because honestly, the trading strategy is just only one part of a trading system, right? Without sound risk management, right, even the best trading strategy that you use isn't going to work out in the long run. So that is my point, right? I'm happy that a few of you who actually followed my calls made money, but do understand that there will be times I will be wrong, and I can be really, really wrong. And the only way I'm going to survive is risk management, right? Don't forget this. This is very, very important. And with regards to the last question, do I offer any signal service? The answer is no, I don't offer any signal service. And it's just my own personal take to it. I find that it's better that I teach you how to trade the markets instead of having you to rely on me to make profits from the market. So this is just my own beliefs, right? So at this point in time, I don't have any signal service. So I'll say the best thing you can do for yourself is just study through my free videos, right, and get a good understanding on what trading is all about. And after that, once you've understood it, you've understand the principles I teach, and you can be pretty much on your own, right? So yeah, this is my reply to whether I have a signal service or not. So that's it. Let's move on into this week's market analysis. The first thing I want to talk about is chasing the markets, right? I'm not sure whether you watched the previous video I did, right? When we talk about breakouts, I mentioned that you don't want to be chasing breakouts because of a very simple reason, right? If you chase breakouts, number one is that you don't have a logical place to put your stop loss. Let's say, for example, on Brexit event day, this is the chart of Euro Yen. This is the daily time frame. And on the day of Brexit itself, look at this spike down lower. Do you know what is the magnitude of this move? This is a 1,700 pip move. Definitely an outlier, if you ask me. So when you see the candle, right, getting bearish and bearish, human tendency is to go and chase this market. So at this point in time, there'll be traders looking to short, and some really unlucky ones shorting near the lows over here. And then what happened? You have this retracement up higher. Well, at this point in time, the retracement doesn't look like much. But if you calculate the magnitude of this retracement, it is almost 500 pips, around 500 pips, this retracement. So you can see that, chasing the markets isn't very favorable, because there's always a chance, number one, for the market to snap back. That's one. And number two is that you do not have a logical place to put your stop loss. Let's say, for example, you went short somewhere here. Where is a logical place to put your stop loss? Above this high? Do you know how many pip this is? This is, I think, 1,000 pip at least, right? From this level, you go short, and over here to put your stop loss. And from a risk to reward perspective, it doesn't really make sense to me. So risk to reward perspective, right, it is pretty much, garbage as well. So you can see that, chasing the markets isn't the best thing to do. So what should you do instead? Number one, patience, my friend. Don't go around chasing the market, right? You want to have patience. Let price come to you, right? Come to an area that you are stalking your entry. So where is that area? On this time frame, on this chart, the area you can look for is at the 20 and 50 period moving average. This is a much favorable place to go short this market, this euro yen. Why is that? Think about this. If you can, say for example, allow price to come to you, say back to this region over here, and you go short at this black line. And let's say, let me change the color. You put your stop loss, say somewhere here. Alright, how about this? Can you see now your risk is much more contained, right? This is your stop loss. And you have this amount of potential profits should price retest back the lows over here. Right? So I'm based on my own estimation, this looks like maybe, a 400 to 500 pips stop loss, right? So let's say your stop loss is 500 pips. But the potential reward, should it go in your favor, it could be, I'm guessing again, right, based on estimation, at least 1,000 pip or more. Right? So can you see from a risk to reward standpoint, this is going to make much more sense compared to earlier while you're chasing the market. While you're chasing the market like this, right? While you're here chasing, you can see that the risk to reward is so much more, it's much poorer, right? This is where you enter, this is where your stop loss is. Can you see the difference right now? So this is what I mean by, let the market comes to you, right? Chasing the market, perhaps, once or twice, you can, get the market to go really in your favor, but most of the time, right, it's going to snap back and you tend to, have more losers than winners, right? And the losers are going to be larger than your winners as well. So this is my point, right? Stop chasing the markets, right? Instead, right, let price come to you. And again, if you look at the dollar yen, similar setup. You look at the pound yen, again, very similar thing altogether, right? The 20-50 period moving average is acting as dynamic resistance. So I would say, for me personally, I would rather much wait for price to come to the area of resistance that I'm looking at before, taking an entry. There are times where I could miss the trade altogether, and this is fine. I perfectly accept it, right? This is just the cost of, doing business, right? This is the opportunity cost that would come by if I were to trade in this approach. But the main thing is that it resonates with me psychologically, right? This is something that I'm comfortable doing over and over again. Okay, so let's move on. So the next thing I want to talk about is the chart of wheat, right? I'm starting to see, a possible move in the making. You can see that wheat, the chart of wheat, right? This is the weekly time frame. You have a series of lower highs, lower highs, lower highs, lower highs, lower highs, and lower lows, right? So the trend is down, right? The longer term trend is down. It's very straightforward. So on a daily time frame, you see that we have this big move over here, right? Massive sell down. So again, same thing, right? If you were to go short right now at this point in time, where is the logical place to put your stop loss, right? Say the nearer one is this possible previous support, turn resistance. So maybe you can put your stop loss somewhere above here. Or for those who are even more defensive, you can go up to this high over here. But honestly, it doesn't really make sense because the stop loss is, way too far, right? From a risk to reward standpoint, right? It's going to take a long time for you even to hit a one-to-one target objective because of the large stop loss you have. So what you can do instead is, again, let price come to you, right? So if price were to retrace back towards this previous support turn resistance, it's an area to go short. So now, right now, I want to teach you another trick that you can do. What you can do is, again, do not trade this chart off this time frame. Instead, go down to a lower time frame and look for a sensible or a logical entry that you can take off. So for example, earlier you saw the daily time frame. Doesn't make sense, right, to trade off the daily time frame because the move is so, the sell down is so huge. But if you go down to the 4-hour time frame, you realize that you can actually better manage this trade on this time frame. How can you do it, right? You look at the 4-hour time frame. What do you notice? Do you notice a pattern? I'm sure you do, right? Because if you look at the 20 period moving average, which is this red line over here, it's acting as dynamic resistance, right? Price has bounced off it once, twice, thrice, almost the 4th time. And so right now, if price were to retest back this 20 period moving average on a 4-hour time frame, this is an opportunity to go short, right? And your stop loss can just be above the 20 period moving average. So can you see this is a potential trading opportunity? Whereas if you look at the daily time frame earlier, you don't see that opportunity. So this is a so-called an additional tip for you, right? To how to actually manage your trades while the market is moving very strongly. All right, so this is something that you can actually consider by going down into a lower time frame and find a sensible entry and exit. Okay, so this I would say is advanced stuff, right? So if you got lost along the way, right, I do apologize, but this is just something for those traders who are more intermediate, right, and want to take their trading to the next level. This is something that you can actually look at. Okay, so this is the thing I'm looking at this week, right? The market is wheat. So the next thing I want to talk about is, okay, so wheat is the first thing. Then earlier we covered the yen pairs, right? So yen pairs, just to recap, right? I'll be waiting for the market to retest back this 20-50 period moving average before I look to get short. So for this market, I'll be looking at the 20 and 50 period moving average before I look to go short this market. So before we end off this week's video, I just want to talk to you about sugar, the trade that Mr. Shun Kui was talking about earlier. Just to share with you how I'm looking to manage this trade. So this is a trade that I shared last week. So what I said was, the market is clearly in an uptrend and price has, retested this 20 period moving average. So what it's showing you is, price rejection, right? It's rejecting lower prices. How do I know that? Just look at the wicks, right? It came down lower, and then the bull stepped in and pushed price higher and finally closed higher over here. And if that isn't convincing enough, the next candle, it opened here and then it pushed price lower all the way here before the bulls come in and push price back higher. Sorry, I mean it opened here and it closed here, right? So you can see that, you have a price rejection on this chart, right? First price rejection, a second price rejection. And on top of it is at a 20 period moving average, which has been acting as dynamic support. So this was a trade that I took, right? A long entry, I went long. And right now, price, has went in my favor. So right now, how I'm looking to manage this trade is that I'm actually trailing my stop loss using the 20 period moving average. So this is a trend following trade. This is not a swing trade. This is a trend following trade. So if price is above the 20 period moving average, I'll be in this trade. But the moment if it closes, right? Say for example, it closes below the 20 period moving average, I'm out of this trade. So this is the trade of sugar and how I'm looking to manage it right now. Okay, so with that said, I've come to the end of this week's market analysis, right? I hope you find it useful, right? Because if you do, please hit the subscribe button below, right? Because you always stay updated whenever I publish a new video on a regular basis. So with that, if you have any questions, any feedback, feel free to let me know in the comment section below. With that, good luck and good trading. I'll talk to you soon.